do you want a business or a hobby? And a business is not necessary for everybody. There are instances when a hobby it makes more sense. So let's talk about the difference. All right. So here's a little quote that I enjoy. Without customers, you don't have a business, you have a hobby. And I think that's very true. That is probably the number one distinguishing factor between the two. So think business if your plans include a profit motive and maximizing your tax deductions. And also, if you have long-term plans, you want to build a client list and do editing for a number of years, that's really probably something you want to consider for a business. Hobby, on the other hand, is something you probably want to think of as, maybe if you're editing a friend's book, a one-time thing, or you just have one client and you're not really worried about tax deductions, you're not worried about making the most profit from this. If that's you're probably in the hobby category. Okay, that's the simplest way to think about it. Now, let's say that you are thinking about a business. There are some benefits. The first is you can establish a brand, you come up with a unique name and market that brand. So that's one way to sort of set yourself apart from all the other editors that do this sort of work. Also, if you do set up a business and get a federal EIN number, which I'm going to talk about a little bit later, you have a little bit of privacy there, and I'll explain that later. But that's a benefit of establishing a business. And last is you get to maximize your tax deductions. Benefits of a hobby: it's fun, it should be, or you shouldn't be in that hobby. And then next, you have to worry about marketing and sales and bookkeeping and tax deductions and all that exciting stuff. So that's kind of the idea of why you might want a hobby. So what does the IRS think is a business? And that's really the most critical thing here for this discussion. And the number one thing is, do you have a profit motive and or a history of profits? Now, that's not to say you have to make money every year. That's not necessarily the requirement of a business. But do you have a profit motive? Are you trying to make a profit every year? And there's different characteristics of that or ways to calculate profit motive. But the number one thing I would tell you or advise anyone is, how much time and effort do you spend with your editing business and marketing that service? So that's kind of the number one thing I would say. How much time are you spending? A lot of time and effort? Is this something you're consistently spending time and money on? Or, like a hobby, I usually think of, it's just you only do it whenever it's convenient. Whenever you have some free time, that might be a hobby. But if you're, whether you're busy doing other things or not, you're spending time and effort on your editing business, that looks more like a business. And then the next thing, the last thing on the slide is, do you run it like a business? Do you advertise? Do you do training to, keep up with the latest, grammar and spelling and all the other skills that you need to be an editor? Are you keeping track of your records, your income, your expenses, that sort of thing? Do you avoid commingling? Commingling is sort of a legal term and basically means, do you have a separate bank account for your business than your personal items? Okay. Do you keep those two things separate? So you only spend money from your business, from your business account, your checking account from the business. And you only spend your personal, going out to eat on the weekends from your personal bank account. You don't mix and match. Right? That would be commingling, and that's generally a no-no. Do you timely file your tax returns and that sort of make efforts to improve profitability? These are all things that mean, hey, you're running it like a business. This looks and smells and quacks like a duck, right? It should be a business for IRS purposes. There is a safe harbor test. And so basically the tax code says, if you made a profit in any 3 years of the last 5, then you're treated as a business. It's presumed. So this is a safe harbor. It's a good thing if you happen to qualify. Now, this is important. If you did not make a profit in any 3 of the last 5 years, the opposite is not true. It is not presumed to be a hobby, even if you lost money the last 5 years in a row. That's not how this works. A safe harbor is just that. You're safe, if you will, if you meet the test. If you don't meet this test, you're still okay as long as you can prove those other things. that we talked about earlier. Do you have a profit motive? Did you run it like a business? That sort of thing. So just be aware of the safe harbor test. Hobby. Now let's talk about the effect. If you have a hobby, the IRS is going to pretty much restrict your deductions. And when we had the Tax Cuts and Jobs Act, which came out in December of 2017, I believe, they basically got rid of all these itemized deductions for hobbyists. So you can no longer take deductions that you could before for supplies, office supplies, home office, all the things that you can for a business. They're gone, advertising costs, whatever. So those are gone. And so basically you still have cost of goods sold, which is really, in my mind, more applicable for like if you're an author, for example, and you have printing costs to print each book, and you print it at your house and sell them, at a fair or hobby, that sort of thing. If you're a hobbyist, you can deduct the printing costs for each book that you do, but all the other stuff we just talked about, home office deduction, advertising, things like that, you can no longer deduct after the Tax Cuts and Jobs Act, which took effect about 5 years ago. So that's be aware of that. That is a heavy restriction. Now, if you lose money and you have a hobby, you can only deduct the excess. Basically, let's say you have a hobby and you spent $100 on your hobby this year, and you made $50. So you spent more than you made as a hobbyist. You cannot deduct the excess that you spent against your other income if you have a day job or whatever. So that is another restriction, even before the Tax Cuts and Jobs Act. If you have a business and you spent $100 on that business and you only made $50 of income from the business, you have an excess loss for the year. You've lost $50 net, and you can deduct that $50 against your other income, your day job salary, for example. So just be aware of those rules